Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday, and it's May the 9th. This is our chart lesson for the day, and another big down day. As you can see, the support is giving way here, so I'm looking for at a minimum a measured move based on this. You can see when we broke out of this the first time, we pretty much made a measured move up. That would be the blue dash line right across here, and now we're headed lower. So my first target would be this area right here, which I think it's 39.13 or something like that. Yeah, it's right around 39.13. You can see that right in there. 39.12 and a quarter, 39.13, somewhere right in there. So that's my target. If we continue lower, if we come up short for that, we might rally out of here finally, but I'm leaning towards at least getting that measured move, and we could go lower. I don't think we're done to the downside. I really don't. I mean, just when it looks the darkest, that's usually when you're getting your capitulation, your final, the last of the sellers cleaning out, and so just because it looks bearish don't mean anything. But my guess is we're going to at least make this measured move, and we could go lower. So it could be that this whole thing was the range, and if we make a measured move based on that, we'd do this same distance from the dark blue to the dash down to here. And so that could mean we've got a target coming of, just look at it and see where that would be. And that puts us down somewhere, it looks like close to 36, 3,700, 36, maybe 3680, 3690 area. So, we're going that low. I don't know, but I didn't think we were going to go below 4,000, and here we are. We traded all the way down just below 4,000 today, and we're actually trading below that in the overnight. So. Needless to say, my first target is here, which is 39.13 or so, and then the next target would be 36.85 or so. So we'll see what happens, but I wanted to put that daily chart up and just kind of give you a look at it, and it doesn't look good at all. So it looks really bearish here. So we'll see what happens. But let's flip over to the daily chart and look at the sell-off we had again today. And you can clearly see this big blue channel here. What this is a spike in channel. This gap here where we gap down, that's a spike in a channel. And this is a gap you can actually see. This is not one you have to go and figure out where we closed yesterday or anything. That's a true gap on today's chart where we closed Friday and then opened here. So there's a gap there. Obviously you probably won't see it on the daily chart because it does overlap, but that's still a gap on the chart. We gapped down and then went into this channel, and that's a nice healthy 45-degree channel there that just continued on. You can see we did get a break in new low and then kind of rallied out of there. Are we going to go higher? I don't know. We just have to see. Right now it's not looking, we pretty much closed not far off the lows for the day, so that's a lot of down movement there. But anyway, we'll zoom in here and we'll go through the trades and try to wrap today up. It's Monday and I've had a long day, and so I may go through these a little quicker than normal, but most of them are pretty straightforward. Okay, 7 o'clock comes just as we're kind of making this move to this high right here, and as you know, we usually start trading around 7, so that's when I start marking the trades. Anything much before 7, and you got to be real careful with the volume and the liquidity, and you get slippage and things. So I usually 7's a good safe trading time, and that's usually when I start, so that's why I start the trades there. But right out of the gate, there's a second entry here, but you can see the signal bar does not qualify. That's a very bearish signal bar, and the signal bar has to be bullish to qualify for a long, so there's no long there. But notice we do get a break higher and a break of this short-term correction right here, and we make a new low, and so that is enough to say, hey, this little move down is over, and we're probably going to try to retest this high here. But more than that, you get a triple test down here. Notice you made that low, you test it once, you test it twice, and you pushed a lot lower before you close back higher here. So that kind of gives you a nice trap to the downside as well as a triple test. And then again, this is played out because you had a break and a new low, and then you get the triple test. And so I like that trade right there to go long. And it runs right up to a new high, and it looks like it's going to be over, and then it runs again. You get a little trap here. Notice that new low, and you get a first entry and then a second entry. So technically when it broke higher right there, it was a failure. But I didn't like entering on that because that's 2 bars in a row with no body, and they got matching highs. And so that's not a good sign. But when it broke lower there again and instantly failed and turned up and went out the other side, they got them trapped there. And this trap's going to probably follow through. And so I like going long there. You could even wait to here if you got enough room to get out before here. That's a fairly big bar. So maybe when it breaks higher here, you drop a limit order in, or you just go ahead and have your buy stop there and try to get a little better entry on that. But that's 23 ticks. I mean, lately in the big scheme of things, it's not huge, but that's a pretty big bar. So depends on if you want to risk that. But I like that because of that extra little tick there. And you can tell they had them trapped by look how that thing rockets straight up. And then as soon as they run all the stops, it just goes right back to being in the range again. So that's what they do a lot of times when they can't push it through resistance like this. They'll create a trap and then run those stops, and that'll give it the momentum to push through. And that looks like what they did there to me. So and then you just get a repeat pattern of that. You get you get a first entry, second entry, and then prices. The only problem is you don't get a break of that trend line here, and you just came off the high, so I'm a little leery, and that's definitely congested, so I didn't mark that. Unfortunately, you don't get a very good, you got a really bearish bar here, but that's not your signal bar. This is your signal bar. And so you can't really go short there. And I really don't think you want to go short into all that support right across that midline. Ends up working, but you don't know that in advance. Then it runs down. You get a higher low here. I didn't mark this because it looks a little bit congested. But you may take this trade just to try to ride it back. I mean, you can see we bounced here again, and this is just a higher low. So I didn't mark it, but I probably should have at least marked it green. It's something to consider. There's reasons to like it. And then, of course, we run up. And this one's a little more difficult to see, but we made a high. We traded down. We came back. We made another high. We traded down. We came back. And we made that high again. And so that's a triple test with a failed break higher. And that does give you a break of the green and a new high. And look how bearish that bar is. I like going short. You might even take that on the engulfing bar if there's enough room between the low here and the EMA. But if it breaks below here, it's probably going much lower. And it does, of course. And I like that move. And suddenly it reverses and goes right back up again, though. I mean, this is hard trading in here. You got to be really careful. So you get a failed breakout. I'd wait on the lower high, which comes here, and not a good enough signal bar. You get another attempt to go higher. Again, not a very good signal bar. You might say, hey, there's a failed second entry long in here. But that's just too much sideways stuff. And you finally get a lower high right here, but the signal bar is not any good. So if you'd had a good signal bar, I would like that. I'd like going short there, because you do have room to get out now, but that signal bar just doesn't qualify. And of course it runs down here and it's chopping along, and yeah, you get this failed break lower way away from the EMA, but that is definitely sideways. There's probably enough room back to the highs here to say, hey, you may want to take that, but I think you need to wait on the higher low, which comes over here, and it's just too sideways by then. It ends up rocketing up. I mean, if you understand why this congestion's forming, then maybe you go long in here. But I just don't see anything I like. Technically, this is your signal bar on this low. And, of course, this one's equal, but it's an inside bar. And it doesn't break above it. So then you got another inside bar. So you just don't get a setup to go long there, really. It's just the way it works sometimes. So it runs up, tries to go lower once, twice. That's too congested. Doesn't get back to the EMA. Even though you figure prices are going higher there, I wouldn't enter that trade. I just don't like it. And again, you turn right back down. But without a break of this green channel, I'd want to see a lower high. And you see, you get one. It's just inside doji looking bars. So again, no entry. You might say, hey, this is a double top, first entry, second entry that fails. So you might enter there on a failure. It's not a great setup, but it's one you could consider. And then finally you come down here and bounce and you get a little failed breakout. But the real thing is that's the third touch of the trend line, that yellow trend line. And that is a second entry. It's kind of an odd one because you broke lower, then you went higher again, and then turned back down, and then you end up closing higher. So it's really a failure right there. So and it's just kind of sideways. So really what you're playing here is a failed breakout and the confirmation of that trend line. So there's a little congestion right there. And you got enough room back to the EMA, which when you're going sideways, the EMA is not that important anyway. So I like that one. Again, there's a lower high here, but too much support across there. I don't like entering there. It works, but next time it won't. And of course, you get this trend down. You get a break, and you get two legs up. There's a second entry right there. Actually, your second entry is right here. But it still looks like two legs up. But I'd wait on the lower, see if you get a lower high, which you do right there. And you actually get a failure here. But I wouldn't take this on the engulfing bar, even though it probably would have worked. I'd want to go short below this, and it doesn't. And prices don't go lower. It makes a new high, and then it makes a lower high. So I like entering there, maybe. But by that time, it's still a lot of congestion and sideways action, and it's right into the EMA. Not a great setup, really. I marked it green. But of course you run down. You could really look at this as a double top, and then you get a first entry, second entry. So if you looked at that as a failure, maybe you take that trade with that big bearish bar. But again, you're probably better off to wait. And it's not long before you get a first entry, second entry. And this breaks higher. Look how bearish that is. You'd probably want to enter that on the engulfing bar. I wouldn't have a problem with that on the second entry right there. That's where the measured move was coming down here, and notice it looked like we were going to bounce, and then we came back and we tested it again, and when it broke higher and failed and turned down on that second entry, that's a good place to go short because you're playing the yellow channel really anyway. When this gave way, you know the support's not holding. And then of course you get a first entry, second entry, and you probably could have taken that trade too, but it wasn't quite back to the trend line. And the fact that we came up short here means we could overshoot it by that much. So you got to be real careful here. So I marked this one on the triple test, but I wasn't crazy about it. But when you get the lower high that breaks higher and turns down, now I like going short there. And again, you may take that one on a triple test, but I think you're better off to wait and see if you get a lower high. And when it breaks higher and fails there again, and you can see they had them trapped. Look how quick and easy that move was. We drop on down, and then we just start going sideways. I wouldn't be buying in here. This is too big of a downtrend now. So you're only looking for shorts, and that's just a first entry there. That's technically a second entry, but it's just not a very good entry. You can see the congestion, and it looks like maybe, hey, we're in a range here, so you're probably going back up here. You may not even go back down. It does, and it would have worked, but it's just not a good setup. And then this one's tempting, but it breaks higher and then turns down. I believe it broke higher first. I'm pretty sure it opened here and broke higher and then turned down and then came back up again. So but I'm not 100% sure on. Actually, it opened right here. It might have broke lower. I don't know about this one because I don't remember. But either way, this is why you wait on a lower high. So if you got stopped out there, again, I'm not sure which way it broke first. So you could have got stopped out on that. But anyway, even if you did, you shouldn't have, because if it broke lower first and then turned up and went out, you know it's going to be an engulfing bar. And the key to that is to move. If you're going to trade an engulfing bar, and sometimes you don't know that it's going to be an engulfing bar if it broke lower first. So if it turns out to be an engulfing bar and you still like the setup, I'd move my stop to the last high, which would be here. Here's your last one, but it's lower than that one, so it would have to go over here. And I'd put my stop there and risk that much more, to, especially on that one tick when it closes back inside. So that's how you'd play that if you play the if you're playing the engulfing bar. Even if you didn't know it was engulfing till it was, it's probably worth considering that, because a lot of times you'll get stopped out on that one little tick like that and it still goes right where you thought. So it's always risky. So that's the reason I'm not crazy. That's why if it broke higher first, I'd probably leave it alone. And then we come back up. Looks like we're making a lower high, but no signal bar, and then it pushes higher and breaks out of that little congestion and gives you this big bearish bar. I like going short there. Comes back again, and that's just an inside bar. It does make an equal high, but there's a little bit of stem there. Wait and see if you get a lower high, which you do here. And I marked this. I meant to mark this in green. It shouldn't be red because the signal bar is real questionable there. But if it breaks below the signal bar, then we're probably going lower, which it ends up doing. So I don't know why I had a red one there. But anyway, it runs down, try to go higher once, twice, a couple of times, and it's coming back and testing this stuff. If this would have made an equal high, you could probably trade that on a triple test, but it doesn't. So it's like we got a little trend, we got a little short-term trend working down here, and you get a break and a new low, and then we bounce. And it bounces off of the blue channel because it's the more dominant pattern, not the yellow one. And you can see where it bounces right there. And I wouldn't be trying to buy this thing. I'd just I'd sit tight and wait and see if it gives me a chance to go short. And notice the green's coming up, you get a break, new high, and you're just chopping along, then it breaks out. That one's very tempting, but I'd wait and see if you got a lower high, and of course you do right there, and I like going short on that one. That's a quick, easy move. You get a close outside, new low, and then suddenly we're running up again. So you'd have to figure we're probably, this second leg up is running up to this trend line. So just sit tight and wait. And I don't see anything up here I like. This one didn't quite get there. It's tempting, but by the time it closes, it's so close to the EMA, and then no signal bar there, and then no signal bar, a little bit too much of a doji, and then certainly too much congestion above the EMA by that time. You just don't get a setup. It's a shame because it turns out to be a really good move. You might have considered that one on the second entry. Technically, that's not even second entry. You could look at it as a first entry, second entry, long failure, but it's not, and it is 2 legs back, but technically this made a lower high. So by the counts, it's not a second entry, but it still looks like 2 legs back and a failed second entry long. So if you saw that, maybe you take that, but I would wait on this one, and the signal bar wasn't quite good enough. If you had a really good signal bar there, maybe you take that, but it's still, look at the bars stacked up in the congestion. Too many bars with no bodies. I just don't like it. Runs down, you get a break, move to a new low, and then we're headed back up, and now you're confirming your yellow one. Again, not a good enough signal bar. But it comes back, tests it again, you get a close outside, and right there, it's real questionable, so I would wait. And then you get a triple test here. And I marked this bar. You're probably saying, why did he mark that big bullish bar? Well, notice your high here, then you tested it once, and then you tested it twice. So technically, that's a failed second entry long. It's not a perfect one by any means, but you're just looking for a reason to get short, and then you get this big bearish bar. So when it broke below that, that's a second entry short. And it is a failure. So if you couldn't trade it on the second entry because technically this is your signal bar. But if you see the triple test, then maybe you take in the failed second entry long, maybe you take it. And it does turn out to be a good move. Then you get the same thing again, another second entry, no good. Signal bar is no good, and we're just kind of chopping in this lower half. That one's real tempting, but I think you got to wait on a lower high. It is a second entry. Notice the new swing low, and technically, I guess it doesn't break lower, but it makes a lower high, so that's still 2 legs up. So technically, that's still a second entry. But we're not back to the high. We're kind of right at the midline. It's just not a good place. So you could get chopped up there. And of course, we run down and we got the break of the yellow channel here. We made 1 leg down, then we made another measured leg down. So basically, you get 2 measured legs down there. I mean, they're perfect measured legs. And it also bounces right at the measured move of the range, which is another good sign. That one's tempting to go long, but don't try to buy these bottoms. I'm just telling you, you get burned because the big blue channel's still in play. And so we're just kind of chopping around, and it's just nothing here. And finally, you get a triple test, and that's a really bearish bar, so I like that one. And it's only good for a scalp, and that's what you got to be careful of. It comes back and makes a higher low, and then another higher. So that's why we like to wait on a lower high. But that is a lower high on a triple test. So, and there's enough room back to the EMA there, even if you're trending up. So, but you can kind of see we're good. I mean, it's obvious we're going sideways by now. It's tempting to buy right there, but I wouldn't do it. And I don't see anything else you can get short on here. So prices just dropped down, and that takes us into 230. So we didn't get, I mean, it's a shame we had such a good move, and you really don't get a chance to enter it. So just no setup there. But all your trades, your best trades were early on. Then it just kind of, it got a little sparse. I mean, this is hard to trade right here. And if you traded today and you got chopped up, then you know what I'm talking about. I don't have to tell you. You know it's hard to trade because there's no consistent lows and there's no real consistent highs almost. And it makes it really hard to trade sideways chop like that. And there's a little bit of a downward bias to it still. So if you played the channel, you might have got some of these trades, but otherwise you probably just got chopped to pieces. And that's why I tell you to stay out of that stuff. When you're trading a range and it's not consistent, be very, very leery of it. They're just hard to trade. You want the easy ones that are consistent and give you good signal bars. That's what you want to trade on when you're trading ranges. So anyway, that's how I saw it today. So, and I'm not going to beat around the bush. It's already getting late, and it's kind of a long day. So I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next